Good afternoon, Rick Baker with Coldwell Banker. I'm in the Frisco, Texas office. Here's something I wanted to send out to everyone about. This is the right way to shop for a mortgage. Now, 95% of people do this wrong. They'll hear about one lender and they'll go apply with them. And a couple days later, maybe they'll hear about something else from a friend. Rates change literally every day, sometimes a couple times in one day. So if you talk to company A on Monday, company B on Thursday, and say rates have gone up, you're going to think the second company screwed you because they're quoting a higher rate. First of all, the only way to shop for a mortgage is get a list of the companies you want to shop with. I would recommend 3 or 4. Then have all your paperwork ready, pull it all together. You're going to need your W-2s, last couple of paychecks if you're in the middle of the year, etc. And then go to all the companies you want to shop with and authorize them to pull your credit on the same day. And I tell them right up front, say, listen, I'm going to be shopping, so you might want to sharpen your pencil. But the most important thing is not just to get the rate, because rates and fees are inversely proportionate. You can get a better rate by paying a lot more fees. So what you have to remember is that A, always get rate and fees. B, shop with 3 or 4 lenders on the exact same day. And that way you can compare apples to apples. And the other thing you got to remember is right now it's overwhelmingly projected that interest rates are going to drop within the next 6 months to maybe a year. So if you're doing any type of a buy down, it's a horrible waste of your money. Find the lowest rate. It's called par, like playing golf, that par. Then that way you can get that at that rate. You may pay a little bit more in the monthly payment, but here's the thing. When you're using a buy down, you got to remember, nothing's for free. You're paying that money up front to the mortgage broker, and that's none of those ever work out right now, because it generally takes a minimum of 3.5 years to 4 years for those to break even. I mean, a simple Google search will tell you that nobody thinks we're going to have these rates this high for even 2 years. So buy now, negotiate very hard, because there's a lot of sellers that are coming onto the market. Last year they couldn't sell the home because of the uncertainties and things like that. Rates were significantly higher. We were in the 7s a year ago. And so they're trying it now. The problem is now all the buyers are waiting for the rates to drop. So you have a ton of inventory coming on, and all the buyers sitting around waiting for rates to go back to what they consider to be normal, say, 3%, which is never going to happen again anyway. So by doing that, if you negotiate hard, get the credit from the seller, use that to pay your closing costs, and don't use the rate buy down. By the way, closing costs includes, you can prepay your 1-year insurance, so you don't have that cash out of your pocket, and you can prepay the HOA for a year. All those types of things are actually technically, they're closing costs, and you can use all that money. So I negotiate a big credit from the seller, use it like that, and then that way you're able to get a better deal and have less out-of-pocket expense. Then when the rates drop, 6 months, maybe a year, you refinance. In the state of Texas, a lot of people don't recognize this or realize this. If you refinance in the first 4 years of ownership, your biggest cost on a refinance is always the title policy. The title policy in the first 4 years of ownership is half price. Since you skip a payment anyway when you refinance, from a cash perspective, month-to-month cash flow, it doesn't really cost you anything to refinance down into a lower rate. So do that. You'll save a ton of money, because if you wait for the rates to drop, everyone's going to run get off the couch, get pre-approved, and we're going to go out and we're going to start looking at, there's not enough houses, because the overwhelming majority of homes in America that have a mortgage have the ultra low COVID rates. And they're not going to sell unless it's what I call the big 3. That's death, job, and divorce. Those are the only 3 reasons people want to sell these days, because it's just tough. So it's a great time to buy. It's a horrible time to sell. If you want to find out why you shouldn't sell, go to my website, neversellyourhome.com, and I teach people how not to sell the home. And there's a simple truth. If it's good enough for you and your family to live in, it's good enough to rent out. I was an investor for 15 years before I was a realtor. At my peak, my wife and I had 52 rental units at the same time. And you know what? The best thing you can do is keep that property, rent it out, create generational wealth for your children, not sell it, and you'll be much better off in a few years, because when the rates drop, the prices are going to go back up because of the demand, because we're going to have a lot of buyers chasing a very small limited number of houses. So that's that. Neversellyourhome.com. Give me a call. I'll show you how to become an investor. And I can show you how to steal a house. In the last few months, I've stolen a couple of houses for buyers. One was brand new construction. They paid $499. The house appraised at $530, $31,000 of equity, brand new construction. And the other one was an investor. They paid $362. The house appraised at $410, $48,000 worth of equity. Absolute home run. So give me a call. Again, it's Rick with Coldwell Banker, 972-836-8880. My main website is getarealrealtor.com. Thank you.